Michael Guthneck, and
Yes.
you're with Premier Mortgage. And tell us where your offices are.
So I have offices all over, the country. I'm physically in Florida. My office right in Boca Raton. We have offices in Jersey, and basically any state we're really licensed, we have offices over. Something else I like to talk about. I don't know if you know this about us as well, but the good thing is, there really is no need anymore for people to come into the mortgage office. We have implemented a service on our phone. We have an app right through the App Store that everyone loves. It's super user friendly. And literally all you need is that app. You can even, if you don't have a computer, you can upload all your documents right through your phone. You can sign all your disclosures right through your phone. It's all right through our app. So sometimes the people are like, oh, well, I'm doing a deal in Tallahassee. Like, oh my gosh, you live in Boca. That's 7 hours away from us. I say, hey, listen, you don't need to come to the office. You come right here. You open up your app. You sign everything. If you want to message me through the app, you message me through the app. And the good thing is, the agent, we also can add them as a, I think it's like considered a co-host. So literally, they'll be updated every time we're submitting through underwriting. Anytime a document's requested, they can see the loan the whole way through. And it's an app store. It's called Simple Nexus. It's really cool. So that's something else that
I think that is amazing because besides taking away the friction of the old days, I mean, I've been around where people are walking in with bank statements, unfolding them from the envelope. That's how it was. But besides that, everything you do now is online. I mean, if you go to the doctor, you get a portal. So what you're doing is entirely in line with what's being done. Your banking, your kids from school stuff. We're not even getting mail anymore. It's just everything online through not just email, which is old, but portals like you're describing. That's the answer. And you know what? Those are really, really trusted because they're secure, they're encrypted, and the information to you. I mean, that's a great selling point for your agents. Is that to work with you means you get safety of the transmission of the data.
Yeah.
And people who really watch the market know what they're talking about. Say that's a really bad way to do business, being so unbalanced, where one side having complete leverage and the other side under normal circumstances would have some fair dialogue, and now they can't. They're being put in positions of waiving appraisals and waiving mortgages with no idea what the rates or the equity would be coming up.
Yeah. I know it's, at least now, I don't like I don't know what your opinion is on this. Right now, I really wouldn't say it's a full buyer's market yet, but I would say that buyers have a little bit more leverage than, the seller right now. But I wouldn't say it's a complete buyers yet, because I'm still seeing sellers, still listing their home at a pretty good value, but at least I'm seeing some sellers concessions, some like inspection periods being pushed out longer. That was another thing. Remember when inspection periods were 1 to 2 days? I'm like, how is this even?
How could you process it? Right.
Yeah. I remember that. So that's the good thing, but I think it's evening out, and just hope it gets better for all of us.
I think you're right. It is not a full buyer's market yet, but it will be. The problem is the sellers are still intoxicated from the prior values, and they don't want to be the ones to break and say, wow, we missed the boat. It's a tough pill to swallow. We missed the boat, honey. And I told you we should have sold. Now look how high the rates are. So that's, to me, a 2023 thing, like into the summer or post-summer when people have gone a good period of time. Like, this rate increase was November, right? October, November.
Yeah.
So let's say it gets to October, November. Now you have a year, which is a really reasonable amount of time to see where the condition of the market is. People then come to the holidays are really going. I mean, I would never say this, but a buyer who, I don't believe in it enough to give a guarantee, but it's a possibility. I think it's a strong possibility that a buyer that really does wait is going to be good around Halloween, Thanksgiving. That's when they're going to save some money. But, as a mortgage guy, so what if you save 40, 50,000? We're talking about 4 or 5,000, 10% down. So what are we really talking about? The difference of payment of not a big amount.
Not at all. I was doing that I was actually thinking of you yesterday. I was doing a little buy down type of conversation with my buyers up in Brooklyn, and I was just kind of telling them, my agent was explaining to me, oh, this house has been on the market 213 days. So they told us they'll give us up to 9% of a seller's concession on a conventional loan since you're putting down. I let her know. I said, hey, if you're putting down more than 25%, some people forget that. If you put down more than 25% on a conventional loan, you can get 9% of your closing costs paid back. So I told her, I said, hey, listen, let's throw the 3-2-1 buy down out of the window. I'm like, this person, if they're telling you they'll get 9% back,
that's massive.
And the house is about I think 950, 4-unit. I was like, tell this guy to forget about the rate temporarily, throw the rate out the window. And I said, let's look at that 9%. I'm like, that's close to $80,000 that the seller is going to give him. I'm like, look at it like this guy. I'm still trying to have a conversation with him because he's still. Well, the rate, and I'm like, I understand the rate, but I'm like, if you really want to do the 3-2-1 buy down, we can do that. But you're doubling your value by just getting all that money back for closing. I'm like, do that, don't take just a 3-2-1 buy down. So we're gonna see. It's just a little hard for him to explain. So we have another call with him today, but that's again, that's crazy. Imagine 2 years ago on a $950,000 multi-unit house getting 9% back. I don't think we would have ever thought that was
no way. Plus, in 9%, in that case, you're talking about he would get all his closing costs back, and like maybe 10-15% of the down payment.
Correct. It's a win-win. So that's why I told the agent. I was like, hey, I just say we just do a regular loan. And I said, I can't ever advise a client, so I say my opinion. I do think eventually, I don't know how much longer the rates can be like this. I really don't. I think eventually something's got to give. It's just, if you look at history, it's always like this, which it has to be in a market, So right now we're up. So hopefully, I think, like you said, I think that October, November, I think you're going to start seeing a big change in the real estate market for sure, And I've only been doing this for 5 years, but I've always liked to study peers of mine like yourself. My parents have been in the industry. They say, hey, listen, this is always an up and down slope. You got to make it in the bad slopes to be the best in the good slopes, So it's just normal. But this is my first. Obviously, I came in when it was beautiful, and I mean, it was still good 5 years ago. Then it got really good 2 to 3 years ago.
Sure.
We'll see. I don't think it'll ever be like that again. 2 to 3% interest rates for really long time, but
no, that's unheard of. I mean, my first apartment was 9.25, and I lived in a world during the 2000s where it always hovered around really 5, 6. I remember the 7s and then 4. It was really if you really look at historically, probably was 4.5 to 7-ish in that ballpark. But houses were less price and lower loan amounts. So, now people are on a good way. The equity's there, and there are fewer buyers. I mean, I think that and no one's talking about this. If you're looking at $500,000 or $600,000, $7,000, $100,000 house, the rates are not possible. So the market of the 350s and 400s are really great. People they've gone lower. So the people in the condo world, or maybe like, different parts of the non-populated, like in the north of Florida or the central Florida, are really, really exploding because those are the values.
Yeah. I'm doing a lot of, the condo business in Florida is very tough too. You got to make sure you work with a lender, that knows what they're doing. Cause, I've had a couple, I've saved a couple loans from, my lender lives in Arizona. And I'm like, of course they don't know how the Florida market works with the condos, So you're right. That is true. I am seeing a lot of that $300,000, $400,000 range. Condos, even like the hottest real estate market. I mean, or the most expensive ones, most like, Miami, from Palm Beach down to Miami, you can still find something decent for $400,000 a condo, If you really want to hold that, hey, I live in Miami, I live in Palm Beach, or whatever it is, you can still find something for that 300 or 400. Is it going to be absolutely beautiful? No, but is it going to be nice? I've seen some nice stuff. I've seen some listings my agents have been putting up. I'm like, wow, that's pretty that's not bad for 350, 400, you know?
Sure, especially in the condo, 3 bedrooms, and so. And you know that my particular bent, because I've been through this a long time in the transactional and the relational world, is people forming really strong relations, and that has to be reciprocal. And right now we live in a world still of the lenders chasing the agents. And I don't even think sometimes when I see that the lenders know the good agents, and maybe the good agents don't want to talk to their new people because they have their people this long. And I've heard people say, listen, I got successful without you. Why do I need you? Right? So someone in your position who's with a great company and young has a great opportunity, I think, to team up with some chosen professionals and get some strategy. And you mentioned the 3-2-1, which was sexy and the gimmick, and it can work. But in this case, I think it's really important that realtors have someone like you as a resource and can verify and explain that if they come into the situation, in lieu of ever doing a price reduction, let's just assist the buyer. Let's collaborate. We can't be so transactional. We have to be much more cooperative and say, we'll help you close, which really is better for the seller because they attract more buyers. They are happier that it's a safer deal. The buyer gets their house and their offer accepted. And I think that's a great burgeoning strategy now. I'm really happy that you're implementing that strategy because if I ask you, if you don't do this, what are you doing? You have no other strategy.
Yeah. And that's what I told the my buyer's agent. She's like, oh, well, they're thinking about dropping it from $999 to $950, maybe to $925. So I was like you said, I said, okay, well, let's play something where everyone's going to win here. I was like, have the buyer come to a reasonable price, but have them have the seller help out the buyer. And, we can make something work. Like you said, help pay for the closing costs, help pay for the rate buy down, whatever the case may be. I try to communicate this. I'm like, hey, don't just throw in the towel and just say, oh, drop the price. Because I'm like, you can still give them what they want. Just help us out on a little bit on the closing cost end, or the points end, or the 3-2-1 buy down, or whatever the case may be,
And it also benefits the buyer on an ongoing basis. It's every month writing a lower check. So, that means it's going to be a long-term positive effect. And what you just described, I think that's a realtor doing exactly the wrong thing, because $950 and $925 is a seller losing a big chunk of money. They hear, they're thinking maybe they owe $700, maybe they owe $600. So now, you're really hitting my pocket. Whereas if you stay close to what I want, and then there's so much more to gain. But I think that, and that was done in the prior market. So before it was a tennis game, give me above asking. Now that people think it's another tennis game, I'm going to lowball you. I don't think either are going to work anymore.
Yeah. I don't think they are either. I just think I think also, because the New York market, the Florida market, I'm sure the New Jersey market. I also think every market is really, I don't think that it's just one market. I think every market's different, and that's why I got licensed in 9 different states, because I see, for example, North Carolina for me and Tennessee are on absolute fire right now. Everyone's leaving Florida and New York, and this meeting in the middle in Tennessee and North Carolina. And that's the thing too. It's like, it's the tennis match game isn't as crazy there as it is in New Jersey, New York, or Florida. It's kind of, it's a way different market. Something else too that I was thinking about as you said that.
Well, the New York and Florida market are sisters. Everyone conversant, especially in the kind of, I should say, destination places, Boca or Delray, or the West Coast, Naples, or even of course Miami. So those are the places that people are really, really conversant, and they expect migration. But even places in Central Florida are not. And it seems to me that when you mention North Carolina or Tennessee, I have people that are going down to South Carolina. Those are like quote unquote neutral sites. It's neither of the two, mainstays or the sexy north-south thing, especially since COVID, and everyone's kind of changing views with their workspace. That means they want to avoid winter. And then whether it's Florida, increase, to eliminate your state income tax. And that makes sense, but there are places that look that your budget's only going to control what you can buy, and that's a good. Are you getting to use? Maybe you could tell people what the non-QM loan is and how does that benefit them?
Definitely. So non-QM is probably the biggest loan product right now for myself, my company. We're one of the biggest players in the whole country, actually, when it comes to non-QM. I just did for a personal family friend. I just had to switch a non-QM loan, and I got it clear to close in 5 days, which is like a record for our company. Basically, non-QM is anything that the conforming loan business doesn't do. So, in a perfect world, most business owners, realtors, for example, anyone don't claim all their taxes. Some people write off all their taxes. Some people claim a loss on their taxes. We can just use your bank statements over the past 12, 24 months, use your income that way, give us a copy of your bank statements. There's other things like asset utilization loans, 1099 loans. So basically I tell all my realtors and clients, some of them are like, oh, well, I don't claim much money. I say, listen, if your credit score is over 660 and you got 15 to 20% to put down, I will be able to find you something. And as long as you obviously have a job or whatever, those are big. I'm not sure I think you have heard of the DSCR loan at all?
No, I have not. So please tell me about it.
So the DSCR loan is, other than the bank statement, it's humongous loan because I'm sure you work with investors. You have the investors that come to you, and it's probably annoying for the realtors. Hey, I don't want to send you all my documents. I own 20 other properties and I have a business. I don't want to do it. And I get it. You know what I mean? I'm sure they don't have time to spend 2-3 hours getting me all this documentation. So what a DSCR loan is, it's actually a loan where we don't use any income verification. All we need is your bank statements, and we need the appraisal to cover your market rent. That is literally it. When I tell you it is the easiest loan to do, I thought I was crazy the first time I did it last year because I got in trouble for putting in their income in the employment section. They say they don't want income, they don't care about it, they don't, nothing at all. So literally when I take an application, it's your name, where you live, and your bank statement. Now, the only catch is that you do have to have a primary residence. So it's only an investor type of loan. So you can't.
Is that 1 to 4 family or more than 4?
It's 1 to 4 family.
I see. So it's a truly investment. You can't use it as your primary.
Correct. Now, obviously, the rates are going to be higher on them because it is a non-QM loan. So typically right now the rates are, high 8s into the 9s for those type of loans. But it's a really great product, and most of the time, some of these investors come and they don't realize, they have so much paperwork that ultimately I have all these people I suggest a DSCR loan. They tell me no. And then they're like, no, it's going to work. But then halfway through, I'm like, this isn't going to work. So let's switch it to DSCR, or if you want to back out the contract. And 9 times out of 10, everyone switches to DSCR and they go, oh, I wish I would have done that in the beginning. You didn't require that. Literally, there's a small amount of documentation that's needed. And that's what I said, literally in 5 days, it was an extreme rush because someone had their earnest money deposit on the line. But in 5 days, we were able to get it done. A non-QM type of loan. So that is something, I do enjoy doing. I do enjoy saving loans. If a loan falls out, I will do DSCR. And that's also the great thing I love about my company is that we are a direct lender. So everything is done in-house. So for example, I'm not a broker, whereas if my loan falls out, it's most likely dead. And usually I'll say, okay, hey, listen, before this loan is not going to make conforming guidelines, let's switch it to a non-QM type of loan. It takes me an hour to switch everything in the file, re-app the file, and then boom, we're doing a non-QM type of loan. And that's how I see it.
I like that.
Save some loans.
I had a non-QM loan this past summer where it took about 3 weeks, and the guy says, well, it's underwriting. I said, wait a minute, this thing's underwritten from day one. So it's not all the channels of processing and updating pay stubs and the normal conventional. So that really made me kind of want to end it. And then they really got focused on it. But it's that. So as far as in my deal took so much time. However, I know that in a non-QM, people can really get to the closing table, especially in even, New York's worse than Florida, in a much quicker time period, like 2 weeks versus 2 months.
Yeah, yeah, you're right about that. No, for sure. Usually, they're really the underwriting process for non-QM loans are. I'm pretty sure the underwriters love it too. They don't have to verify everything. We don't need VOEs. We don't need prior VOEs. It's a pretty easy thing. And like even if there's foreign national, a lot in South Florida, there's a lot of foreign national clients that come. You can even do a DSCR foreign national loan. You just have to put down 30%. So it's like these type of things where, I tell my agencies, and it's kind of like crazy that a lot of agents don't even know that's a real thing. They're like, oh, wait, you don't even have to be a citizen here and you can buy a DSCR loan, 30% down. I'm like, yes, you don't even need a credit score, So it's a great product. As long as the client is okay with the higher rate, usually they do have a prepayment penalty for a year to 4 years, but you can set it how you want it, or you can do a no prepayment penalty. But I'm sure you would guess this: the shorter the prepayment penalty or no prepayment penalty, the higher your rate's going to be.
Mm-hmm.
So
more risk. I get it. And you mentioned the agents, and I think the agents really must be much more conversant. And that's why, as I always preach, it's a combination. It's really peanut butter and jelly, where the agent can be out there. They're going to talk to more people than you do. They're walking through the snow and the ice and the sitting at kitchen tables. You guys are in nice offices. You have the information. You can secure the money, but they need to know what the possibilities are. And that's why I believe so strongly in education and making them aware and connecting them with the resources like yourself, where, they may be frustrated and that they may have a good buyer in their presence, or they may have a seller. And I think this is more important. Maybe a seller and they get hit by a buyer who's educated by you, buyer's agent that's educated by you, and they say, oh, I don't even know. They can't properly advise the seller. The seller could be, some surgeon. He knows nothing, right? Yeah. And then a listing agent gets hit by an agent that works with you. They say, what's DSCR? Is that a DVR? Is that, I don't even know, what is, they don't even know what you're talking about. So you really have to keep them and get in the deal yourself.
Yeah, no, for sure. It's a great product. Like I said, most agents don't really know it. It kind of amazes me when you tell them this, or I go to any events or I meet one out and I say, hey, have you heard of these DSCR loans that are running South Florida? And primarily, they're huge in South Florida because South Florida has a ton of, self-employed borrowers and investors. So, it's an amazing product.
Yeah, and that's transactional but relational. I see that there's it always perturbs me when I see these two professionals that should be working arm in arm and they are in fact still playing cat and mouse. It bothers me because the natural impulse. I've been a licensed real estate broker since 1997. And a lawyer from 92 till really 21 years after that or so in this field. And I see that there's the chase, and it doesn't have to be that way. The lenders don't do a good enough job of demonstrating that the realtor needs them, and they also don't do a great job in giving them something that they can use to benefit, like local exposure. To me, that's key. As you are here, you're giving your information, but you're also giving people a chance to promote themselves. And that really is, I made PlugIntro for that reason, to allow each, the lender and the realtor, and together to set themselves apart.
Yeah, no, for sure. And I do like the platform. I do think it's a different way to kind of, put your name out there than what everyone else is doing. You always want to be not what everyone else is doing, trying to make your own thing. And I do like that for sure. And having your own little network group of people, it's great.
And plus, giving, when you're giving someone, you can always reach them. If you're asking them, it's tough to always reach them. You can't keep asking and asking and asking. And that's because what the other people are doing. And now it should be really between the professionals in these tough deals now, a much more even level playing field. And I think that any form of collaborating legally, is beneficial. I've seen lenders paying for Zillow leads. And unfortunately, those are just leads. Those are just people that neither of them know, versus having some people in a community that trust. I mean, imagine if you and I in a very, very local community across America, we each would know a lot of people. And then they know Michael, Scott, he's a good guy. And these are the people you should do business with.
Yeah. Yeah, no, and I like the I think it was either your page or PlugIntro, or it was Instagram. One of the three, you'll know now. I saw a picture you posted from a breakdown of where the referrals come from, or how people get business.
Yeah, I love that one.
Yeah, and I think the first line was obviously the clear first, out of everything. I think it was just referrals and people referring back and forth to each other. And I said, it really is the truth. I always, some people, I don't hate social media, but I hate the cliche, oh, get out on social media. I just think it was maybe good when it first started, social media started, but now everyone does it. You go down your timeline, if you're a realtor or mortgage person, all you see is the same. I can even advocate. I do it to myself sometimes. You post the same picture and the same wording, the same type of message you're kind of getting across. And how many people really stop and look for it, other than your friends? They hit like.
That's it.
Out there, for sure.
I was at a conference recently, and they were, preaching social media, and I said, so I'm going to look into this. And I saw that the 2022 NAR report was coming out, and I ran to that page. I looked at when do you do this? Do you ever look at an index and see the page you want? Like, what year is this? I haven't done that in so many years. I went and found it. I mean, engagement, like in a hire me for any reason way. I want a dialogue, because it seems that this is some bad news. Imagine that my trade union, this organization, is reporting that what we've been told is 99% unsuccessful. And the only part that surprised me, well, I was surprised it was that low. I would have thought like 5 or 10 or something like that. People pick their realtor from an online source, a blog post, a social media post, is that you're young. If you look at the bottom of that graph, it was the same from 30s to 60s. So I thought, wait a minute, I've been told that the young people are so digital, they are relying on referrals as much as old coots in their 50s, like me.
Yeah.
Didn't that shock you?
I mean, to be honest with you, if I ever need, I'm kind of old, I like to say I'm kind of an old soul sometimes. I mean, if I need something, or I know someone that knows, like if I need it, like a doctor, or needed my tires done, or I would message my closest friend that knows people for cars. He deals with cars. If message someone who's a good doctor in the area. I just I don't really like to go look up online and do that, because sometimes I'd rather trust the word of someone that I personally know that will want the same type of business that I want. So I agree with you as well. I think that's so much more important. I don't think it's as easy. I think society makes it seem like the younger generation, my generation, just looks things up on the internet and says, oh, I want this, or let me go on social media and type in whatever service I want. I typically, I'm just speaking for myself, I don't ever do that unless I reach out to all my referral or anyone I want a referral from, and they're like, I have no idea. Then that's when I would go online.
Right, but you're in a financial sector, so you're in a higher level person. If someone's working in either a dumb job or a dead end where they're not really dealing with people in the way you are, that's really, you're much more connected. You got a long time bank you're working with, and people are, to me, the social media thing can make someone an instant influencer, but yet the people who really have influence are the ones who are doing business in the town, in the city. Accountants are not fly by night. Dentists are not fly by night. They're generational. You might go to the same dentist your folks went, or you have, the car mechanic, or these are people that they're really there. They're there and they're staying there, versus someone that pops up, with 1,000 likes and a fake Rolex.
Exactly. That's how the world of social media.
Yeah. Well, that shows. I mean, authority and a giving back to me is everything, and it's so easy. We have this small proprietary software, and we're happy that we put together platforms for big banks and all the name brand companies, Keller Williams, uh, of course EXP, of course Century 20, Blue, Coldwell Banker. I think video is everything today. I was reading something how video makes up something like 40% of all usage online. How about that?
Wow.
That tells you. I mean, COVID did that, but now it's on your phone, Zoom. It's going to be it's going to be 100%.
Yeah, no, it is for sure. No.
Right. I think people need to see your expression. I'm reading your body language. You're not unsure of yourself. You're very, very confident. People can feel the passion and even the tone of voice.
Yeah.
If let's say you don't know what the hell you're talking about, you're not going to be. It's going to show.
Yeah.
Right. I mean, I didn't even know what is that DC. What does that loan stand for? What is DC? What is that? I don't know what that is.
DSCR. DSCR. You're gonna kill me. To be honest, a long time ago I asked what it was, and it was a weird way to remember it. So I just always remember it as DSCR.
Okay. Well, I mean that shows that you have even more valuable information. Because I didn't know that much about it. I mean, it means that that loan should be considered really everywhere, and you're in 9 states, so those agents there. I mean, a lot of agents don't even know about the non-QM, so they're not going to know this.
Yeah, same day I had a agent from Tennessee send me a client, and same thing. It was they have a primary residence in Georgia. Their income's a little, kind of crazy. So I ended up telling them, hey, listen, you guys want to buy a home in, you want to buy a home in Tennessee? I said, do you have the 20% down? Oh yeah, that's what we were looking to do anyway. We didn't want PMI. I said, okay, great. Then there's this loan called a DSCR loan. You're not going to qualify conforming. And the agent was like, oh, really? And I'm like, yeah. He goes, well, I didn't know this. I have a ton of investors. I'll start sending your way. I didn't know, not all companies offer it either, which is good. I like, so, and I have it in-house, which is great. Sometimes a lot of these non-QM, you got to go to them. You have to be a broker. And it's not always fun. For example, my company, if we don't have a loan product, we can broker it out, but it kind of defeats the purpose, I like to say, of myself. I don't have control of the loan. I don't really like that, because it's like, dang, now I know what it's, I can't just call my underwriter or my processor and say, hey, what's going on? What do we need to get done here? What documentation are you looking for?
Mm-hmm. So, well, I mean, in this one short time together, we've talked about 3 innovative approaches where you're really implementing the use of collaboration, where a seller would make it easier for a buyer by contributing towards closing costs. But in my mind, that's not the old-fashioned contributing. What you're doing is not reducing the price, and not reducing the price means you would have reduced it in this market. Basically, every house is a price reduction. So instead of chopping money off that doesn't help the seller and doesn't help the buyer, put it towards something that does help both parties. It's crazy how that is just that's an amazing innovation right in front of us. The second thing is the non-QM, and the third thing is the DSCR. CR. So that's an investor that should be known really on these urban areas where people are may have more than one. I mean, that's something where I know investors that have several properties, and then that's great. It's a great idea. And relationships, relationships are paramount. And I really don't like the phrase, we're building relations or giving value. If you're doing your job, that's not giving value. You're doing what they expect you to do. I mean, and the problem is in both of these professions, lending and realtors think that doing the job is value. That's the beginning. You have to do that. But what are you doing to set yourself apart? And how are you enhancing the client experience? And how are you standing out? That's really what makes you stand out. It's having a better offering than others.
Correct.
It's powerful. Yeah, well, I think it's important. And I think that it should be fun too, because now you can reach someone giving, instead of just a Christmas basket, you have something that helps every day of the year. And the Christmas bag is great, the great goodies in it, but it's not going to make you a dime. This will.
Yeah, no, it's the truth. It's the truth.
So that's great. Well, this is your video interview series. I'm glad we got it launched. We're here for weekly or monthly. Whatever comes up in your life when you want to share, and also whatever agents you meet or know. I always say there's only two kinds of agents: the ones you know, and those you want to thank. I'm sure you have a lot of agents you'd like to thank and give them the chance to promote their business, because they don't have this. They don't have a way to be seen by their local community. Michael, let's resume, and we're going to make sure that your agents know that you have this valuable information and that you're offering them as well a chance to promote themselves. Thanks, and let's schedule our next one and keep them aware of what's going on in each of the markets and how you help them and why you're the best person for the job.
Thank you so much, Scott, and thank you for your time.